And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. And we're going to talk about four things today. One, why traditional markets are crashing despite the quite impressive jobs report. Two, we're going to talk about the Federal Reserve and what they said yesterday. And three, we're going to talk about what you should do in the event we have more uncertain times ahead. Just sort of a broad-based recommendation. And number four, we're going to talk about Bitcoin's price action and a few of my favorite altcoins. So first things first, number one, employers did add, let's see, where's the jobs report? Employers added a roaring 678,000 jobs in February, the most since last summer as COVID-19's Omicron variant faded. And the unemployment rate did fall from 4% to 3.8%, the labor department said today. However, the stock market remains edged over the Ukraine-Russia war. And Russia, their forces literally shelled up so that is the rumor, right? The largest nuclear power plant, and their military, the Russian military, has taken over the power plant. And the attack is just causing more worries of, right, a massive environmental disaster. And it really just shows that the Russian attacks are becoming more indiscriminate, and Putin really has no, he has no, he really doesn't want to talk about peace talks, right? And so the European Union is being urged to suspend all oil and gas imports from Russia, which would in effect cause oil prices to shoot up even more in Europe, and even more companies would be hurt in the United States. It would just bleed across the globe. And it is just fear, uncertainty, and doubt. The FUD is real. When there's a bunch of fear, uncertainty, and doubt, there's a flight to safety, right? So risk on assets get hurt, and well, the dollar is skyrocketing. We've been talking about this for some time. When dollar goes up, typically bad for stocks and Bitcoin. However, and we do have a target on the dollar up here at about $1.03. So that is based off the macro breakout that we are seeing here on the weekly time frame. And we did get a breakout and then a test of the yellow 21. And we are onwards and upwards, about to get a golden cross, in fact. And so, again, first target hit here. We got a test back down. And now it looks like we are moving back towards our second target there at about 103. So that's something to be keeping a keen eye on. And with a flight to safety, right, risk on assets get hurt. Again, bond yields are going up. There's more demand for bonds. And, more demand, it means they can lower the rates. Anyways, number two, let's talk about what we learned from the Federal Reserve yesterday. And the Federal Reserve yesterday said, hey, look, we're still printing money. We're easing off the balance sheet, and they lowered their bond purchasing by $20 billion, which is crazy. The fact that they're still printing money. They're going to end their bond buying March 10th, and that means finally the bond buying, along with tapering, is going to essentially. Finally, they're going to end the bond buying, and tapering will end March 10th, right before the Fed's meeting March 15th and 16th. And on the same day, the March CPI data will come up. So this is interesting, right? The Federal Reserve is reducing its bond purchasing. So this is the final round of money printing from the Federal Reserve. I can't even believe I'm saying it. They're stopping the money printing. I doubt it. So this is the beginning of monetary tightening. And when we print money, right, that's when they're injecting money into the economy. When we tighten, they're going to take money out. And we expect the tightening process to begin in May, at the kind of mid or end of May. And they said the first interest rate hike is due to come March 15th or 16th this month, 0.25%. So mark this date on your calendar, March 10th. The CPI data will come in, and inflation is expected to come in hotter, even higher than we thought. And here's the bigger concern. Yesterday, the Fed chair, Messer, said this. They support the 0.25% rate hike, but basically if in the next 6 months, and this is how I'm interpreting it, I mean, don't quote me here, but she basically said if in the next 6 months or around June or July, they can't get inflation under control, they may have to go back up to the 0.5% rate hike. So Messer's a little bit more hawkish, Powell's a little more dovish. But here is the silver lining. The Fed said yesterday, right? They revised their wage prices from last month, and wages actually didn't go up more than inflation. So they had said that wages increased by 8.8% and inflation was at 7.9%. Now they're saying that the wage inflation was actually less than 7.9. So the chance of a wage price spiral just went down significantly. That is a major point for the bulls. And really, that's the best news we could have had. Wage price spiraling means they would have to actually force a recession. Now, what else? What else? So 3, what should you do in the event we should have more uncertain times ahead of us? That's the big question, right? And so how would we know we're going into more uncertain times? Well, I would say if if Putin hits the red button, that'll be very uncertain times. And 2, you got to keep an eye on wage price spiraling. As long as that is under control, the Fed is saying the course, we're going to stay the course with a 0.25% rate hikes on and on from here. So if the Fed does what they say they're going to do, that means certainty for the markets. They know what's going to happen. And I'd say that's more bullish. Now, the other thing to watch out for is runaway inflation. More importantly, why is that? The inflation numbers that just came out, or the inflation report that just came out, the jobs report, only calculated inflation back, only calculated the jobs back to from February 12th, which doesn't take into account the Russian incursion. So let's watch out for some runaway inflation. I looked at gas prices this morning. I took a picture of it. They were over $5, which I couldn't imagine paying over $5 a gallon for gas. That's just crazy. That brings me up to number 4, Bitcoin's price action, which I am much more comfortable talking about. And what had we been talking about yesterday on the CMEs? We did say any kind of an hourly closure below 42 or 43,000 was going to get us a move to fill the gap. We more than fill the gap. We overshot the gap here. And so that's been done there. And so what else am I looking at here? Well, Nasdaq is getting a bit of a relief rally. I mean, we were down quite a bit here. And on the daily here, Nasdaq was down quite a bit. S&P was down like almost 500 points at one point. And it looks like we are getting a little bit of a relief rally. But here's what I want to see is a daily closure back above 34,000 on the Dow. On the S&P, we got to get back really above this guy now, or this guy to call a major macro up. Not major macro up move, but at least a shot to the top side of the range, which we can move this down here, and that probably gets us a move at least to the green 55. But how does this all play in? You know, when stocks are going down, typically Bitcoin's going down. And so what else did we say yesterday? We said as long as we are closing dailies above, and more importantly on spot price action, as long as we're closing dailies above 40,000 right here, this level right here at 40,258, and the yellow 21, kind of supporting us here. And we did say, yeah, if we got a tick below this guy 2 days ago, we'd get a move down to the 9 exponential. We overshot that. And yeah, that's what I'd be saying. So I have been saying, look, patience is the name of the game. When Bitcoin was getting back up to 45,000 just the other day, I mean, look, I've been saying wait for a daily closure above 46, or, if you want to call it 45, 824. I think 46 is just a little bit more conservative. Nice round number. Wait for a daily closure back above 46 or below 33. And that's when the warning bells will really be starting to ring. And that's actually how I would identify kind of what to do. If Bitcoin does close a daily back below 33, yeah, that's time to take some risk off. If we do close back above 46, that's, in my opinion, good time to take some risk on. I do believe, given that news report, given the jobs report, given the threat of wage price spiraling going down, as long as we don't have any more extreme war conditions come up, right? Extreme, some kind of crazy thing that Putin does, as long as that doesn't happen, I do think this is rather nice for a good risk to reward potential. And we did identify yesterday, okay, how would we call this a failed rally on the daily time frame? Because Bitcoin did put in, almost a 22% rally since the day of the war, or the day after the war started in Ukraine. 21% rally. That it was very likely to cool off and pull back, right? So how would we identify this as a little bit of a bull trap? Well, we would use the Fibonacci retracement tool, going from the low to the high on a bearish retracement, and a closure back below the 618 right there, which is the that's on a bearish retracement. On a bullish retracement, it is the 382. It's the same level, right? It's coming in right there it's really coming in at 40,440, but this was kind of the breakout area at 40,266. So as long as we don't close any dailies below there, if we do, I would expect a move back to the bottom side of the range of about 37,000. And as long as open interest doesn't get way up there, in fact, let's sign in here and take a look at open interest. Open interest, what are we doing? Open interest is coming down alongside price action coming down or correcting. That's pretty normal. And as long as open interest doesn't get up above 12, 13 billion, I'd call it 13 to 14 billion, that's when you can start to expect, hey, we could be in for a 25% or more correction. What else do we have? I bet you the fear and greed index is just going. Oh, we're still in the fearful zone at 33, and we are getting more fearful as Bitcoin's price is coming down and the war is erupting. That's to be expected. And typically a reset comes in down there around 20 or 10. So the old saying, when people are extremely fearful, time to be greedy. When people start to get greedy, that's the time to be fearful. So let's just round it out on Bitcoin's analysis here. And we did have a couple other things coming up here today. We've been talking about on the weekly, and this was really important. We're just looking for any kind of a weekly closure above this high at 40,266. Some people would be waiting for a weekly closure back above 40,244. We did get the move. We already got the move up to that yellow 21, and we were killing back quite a bit here off of that region. And look, that has been, we've been up there now 4 times. The more times you test a trend line, the weaker it gets. And these are the highs being put in over the last 1, 2, 3, 4, 5, 6, 7, 8 weeks. So call it almost 2 months. But I am leaning to the side still for the bulls to pull through here. As long as we can close this weekly on Sunday back above, this pivot right here at 40,300. And that's right in line with the daily, right? The daily needs to stay above 40,000. This level right here. Otherwise, our chances of a downside move are even greater. And that can also be identified by the 0.5, which if we're going bars to bars. So closing below this guy at 41,000 today is going to significantly increase the odds of this being a bull trap. And I'd be just really watching a keen eye on this level. If this level does break, I am expecting a return at least back down somewhere in this region. Okay, that's wrapping it up for Bitcoin. And what else did I want to take a look at? Mr. Luna here, which has been one of the more powerful altcoins. We're consolidating at the highs. It is only down 0.7% versus everything else, which is, taking it on the chin. Even Atom really dumping it out here. And I would say Atom, any kind of a tick below this guy, going to get a move down to the 9 exponential at a minimum. And what did we have here that is kind of signaling? And I do believe we called this out yesterday with any kind of a 4-hour closure below 33.64. That would confirm some bearish divergence, and 4 drives, in fact, and that typically gives you a move to the green 55, which I also did say could be a major buying opportunity with a good way to manage your risk, because we have the golden cross here, and typically you want to test the golden cross and then get a big bounce, and that's typically when you see, but then if you get a 4-hour closure, I'd say below 29, game over, right? Not game over, but at least a return back to the lows. I still really like this project, and this is coming alongside declining volatility, and Stokes are going to be crossing down here and will remain crossed down as long as we are closing 4 hours below 34.22, which we're quite a long distance away from that level at this point. So needs to get back above 34.22 to cross back up. And I would say, hey, if this wants to reset and we kind of play out this trend line here, which is coming back on the Stokes from all the way from here, and these things can be regressive. So, but yeah, as long as we don't crack back below this guy, we can come back down and test it. But if this wants to come back down here, alongside volatility getting a reset, I would say that looks very nice for a big bounce. And hopefully Bitcoin bounces alongside with it. At the moment, what is Bitcoin doing? We're just bleeding it out. And, kind of probably going to give a swipe back down to this low here. And that might give us a couple of drives of, nope. Would I consider this a confirmed low? No. Looks like another perhaps lower high. But yep, so what about Ethereum? What did we talk about on Ethereum yesterday on the daily time frame? Kind of the same thing with Bitcoin. We were waiting for a closure above 30,800, and if you want to be more conservative, yeah, I think a closure back above this guy is going to give us a move at least to the top side of the range. And really, I'd be waiting for the closure back above 3,400 to get bullish for a move up to 38. And then still we're going to be playing out some divergences, I imagine, alongside Bitcoin if we can't clear above 3,800 for Ethereum. So back on to Luna, what we were talking about here is, any kind of a daily closure below here. I imagine what happens is this 9 exponential ticks up a bit more and we get a test there. As long as we don't start closing below there, And if we do, I mean, it's still completely fine. Still bullish as long as we are closing, I would say, above $72 on a daily. Looking for, longer term targets to get hit. The weekly close, this is very powerful. And you can see the buying volume is it's decreasing definitely this week. We haven't had a weekly closure. That'll come up in 2 days and 6 hours. And Gala is taking it on the chin, not playing out the divergences we were looking for. One last thing I'm going to point out on the stock market here, which is a bit concerning on the daily time frame, and that is this guy right here. That is a death cross coming into play, and it hasn't crossed yet, so that's a good thing. We definitely don't want to see a rally into this cross and then a big sell-off. That would look bad. But why am I bringing this up? Well, the last time we had a death cross on the daily for the Nasdaq was way back here. And you can see what happened. So, no, that was a failed death cross. So that's what we do want to see, is price action to get real close to crossing, not quite cross, break back above. Then all the moving averages get back above each other. And that'll look very, very bullish for Nasdaq. And I'd be looking for new all-time highs at that point. But the one before that, the death cross happened right here, December 2018. And that was, I believe, right around, we had the Fed taper tantrum when, Powell started saying he's going to raise rates. So we basically tested the cross there, or you could almost call that a test. But we got the cross, we rallied back up into it, and then just got shafted down and held down by the 21 exponential. So how does that compare to what we're doing right now? Let's take a look. So we did get a test right before the cross. We are being held down by the 21. And so really, really, we need to see NASDAQ. Now, let's use a fib retracement from this breakdown. And so we got back above the 618. We're testing the 0.5. I'm going to go with the side of we're putting in a bit of a bounce at some point, unless we get some really bad news. Any kind of a daily closure back below here, I'm looking for this thing to retest the lows at 13,000. And that probably goes alongside with Bitcoin retesting 36 to 35,000. All right, that's going to wrap it up for today. Thank you guys so much for watching. And if you do want to find out how to put Bitcoin or cryptocurrency within your IRA, we're going to provide a link in the description below. Thank you very much. Have yourself a blessed day and a great weekend. Take care.